Okay, hello everyone. My name is Anirudh and I'm the co-chair of this year's Michigan India Conference. I would first like to thank our panelists, Dr. Nageswaran and Mr. Mishra, and the moderator, Mr. Gopal Srinivasan, for graciously taking time out of their schedule to be here. I would also like to thank our attendees for tuning in. Before we begin, I would like to run over some information. So your video and audio will be muted throughout the session. If you have any questions for the panelists, please leave it in the Q&A section where you should be able to upvote questions. The questions with the most upvotes will be the ones that will be asked. Today's session, we're going to start with the opening address, followed by the panel itself, and then we'll end with questions. So we hope to split the session itself and the questions in equal parts to give everybody sufficient time to engage with the panelists. Now, in addition to today's event, we're going to have another event on the 19th with Mr. D. Shivkumar of the Aditya Birla Group. His session will be on stability and change. And on the 26th, we'll be having a fireside chat with Ambassador Tim Romer on US-India relations. Now I would like to introduce Dr. M.S. Krishnan, who will be giving the opening address. Dr. M.S. Krishnan is the Associate Dean of Executive Programs and the Accenture Professor of Computer Information Systems at the Stephen M. Ross School of Business. He's the co-author of the book, The New Age of Innovation, Driving Co-Created Value with Global Networks, along with the late great Dr. C.K. Prahlad. And it is with Dr. C.K. Prahlad that he started this conference back in 2009. And it is only because of his continued support and mentorship that we are in our 12th edition this year. Dr. Krishnan, on behalf of the planning committee, we would like to thank you for doing the opening address today. Over to you.
Thank you, Annie. Very good morning to all of you here in Ann Arbor, Michigan, or this part of the world, and good evening to all our alumni friends of Michigan in India and other parts of the world. It's my pleasure to welcome you all to this special India Business Conference format, and I want to first of all commend our students for the enthusiasm and the passion with which they actually worked. Despite all the challenges with the COVID, I mean, they have to be commended because I still remember it's exactly 1 year, and the pandemic actually hit India Business Conference last year, right at the time where we were about to launch the conference in a couple of days, and unfortunately we had to pull the plug because the entire university closed down, and we were not, as we all know at that time, we had no clue of what's coming. And so this is the 12th India Business Conference, as Michigan India Business Conference, as Anirudh mentioned. And my memories go back 2009 when we started, we launched the first conference. Again, I think I'll give full credit to our alumni base in India who encouraged us and were kind of very, very passionate about creating something about Michigan in India. And that's what motivated us. And, with, of course, encouragement from CK. That was our first conference. And having missed the beat last year because of the pandemic, this is our 12th conference in a row, and it's all entirely the work done by our students and alumni together. I can also acknowledge the flexibility and the agility that our student team has shown in rethinking the format of the conference, given the pandemic. Instead of having this as a day and a half, kind of a format, and they've now chunked it into pieces over the next 3 weeks, as Annie mentioned. So this is going to be a very interesting, format for us to all engage and adapt to the conditions, as they say. You kind of adapt to whatever changes. We teach that in business school, but I think it'll be an understatement if I have to repeat this, because students are the ones. Student community is kind of affected the most by the pandemic. If you think, the social experience that they get, both the curricular and the co-curricular experience that we provide them in the universities, I think that's been significantly affected by their inability to come together in person. But our student teams, how they work together in teams, connecting across Zooms or Teams or all different platforms and through phones to make this, pull together something like this. It just truly talks about their, the spirit and the passion they have. I would like to especially acknowledge, of course, Anirudh Davluri for leading this conference, because I still remember Ani when he joined Michigan almost 3 years back as a freshman. He wanted to be part of this conference right from day one. And I'd like to recognize Ashish, who was a co-chair with Ani, and Maitri, who actually took care of speaker relationship and for the conference, Sean for marketing and finance, Akash for operations, Binta for marketing, and Rishita for the CK Prahlad Grand Challenge. There's another information to share. We are continuing with the CK Prahlad Grand Challenge again this year. And this year, obviously the problem is defined around the challenges of distributing vaccines, and it's more healthcare kind of related problem. We look forward to, we got so many entries from across the business schools across the world, and we are in the process of now finalizing the top 5 teams, and I look forward to engaging with them. So with that, let's come back to today's, first event. We are indeed fortunate to have this panel chaired by our own Mr. Gopal Srinivasan. And Gopal is and he doesn't need any introduction for the Michigan family, broad alumni base or students. For students' sake, I would like to introduce Gopal because he's our senior alum in India. In fact, he's one of the key persons who actually encouraged us and gave us all the support to launch something like India Business Conference way back in 2008, 2009. And he's contributed to each and every conference right from then, and encouraging us to do so many of our activities that Michigan is involved in India. I think I'll give credit to people like Gopal. And I'm introducing Gopal as the chairman of the TVS Capital Funds and the senior Michigan alumni, and also somebody who's going to be moderating the panel with our esteemed panelist, Anantha and Neelkanth today. But I see Gopal more of as a panelist himself, because with his rich experience with the Indian economy and what's going on in India, this is going to be a fascinating discussion. And once again, Gopal and the panelists, thank you so much for bringing together, almost like a think tank of the Indian economy in terms of what's going on, as an opportunity for our students to, interact. This is exciting times, a lot of optimism around the globe, optimism in India about as we slowly come out of the pandemic, and we do seem to be seeing the light at the end of the tunnel. And with that, so many things happening both in the context of U.S.-India relationship and also Indian economy more primarily. I now turn it over to Gopal. Welcome, Gopal. Welcome to the panelists.
Thank you very much. Thank you very much, Krishna. Thank you, Ani. And it's always a pleasure, even virtually, to be back home at Ann Arbor. Always love being there. It's a great feeling. This is the budget for the year FY22. And I pause on that for a second to remind ourselves that CK's seminal work, India at 75, actually celebrated what India can be in the year 2022. When asked to write about India at 60, he said, that's done and dusted. Let me write about India at 75. I'm sure, and I do hope many of you have read his excellent piece on that, which I think is just so inspiring, as well as being so clear as to what kind of things India needs to do. I think CK would be happy to see that today we stand celebrating what's been called the budget of the century, what's been called a great management, economic and health management of the COVID crisis, what's been called Atmanirbhar Bharat, what's been called the bridge to $5 trillion GDP, and on and on and on. And this would be something that I think would make Krishna and CK very happy, because his vision for India was that India's constant is never seeing its full potential. And today I believe that India is beginning to see its full potential with the kind of budget that we have. And to discuss this, we have two outstanding people, two outstanding thinkers, two outstanding friends of mine as well, but who are great nationalists who see the power of India. I'd first like to introduce Dr. Anantha Nageswaran, who is an economist, who has worked in various firms from Credit Suisse onwards. And basically, he has been also an academic. He has been the dean of the IFMR Business School in India. He serves on several boards as well. And he is here with us today in his capacity also as a member of the Prime Minister's Economic Advisory Council, which is a purely advisory council which advises the Prime Minister on the Indian economy. Along with him, Neelkanth Mishra. Mr. Neelkanth Mishra is a very, very well-known TV personality as well. He speaks often on many, many issues, and his words are taken with great weight. He is the co-head of Asia Pac strategy as well as a managing director of Credit Suisse, and writes very frequently on very important issues. So I would really want to thank Anantha and Neelkanth. Thank you, gentlemen, for taking the time to be with us at the Ross Business School India Business Conference. Very, very kind of you to have done this. So with these introductions, I think this budget has been fabulous, right? India's got double-digit growth, nearly 11% growth, leaving quite a few people behind. Everybody's saying we managed the economy well, 11% growth is around the corner. India has been in the news for so-called vaccine diplomacy, which is a new word in the post-COVID era, where Indian ambassadors receive flights of landing with fresh vaccines. FDI inflow has been amazing. In fact, this last year's FDI inflow has actually gone beyond what anybody expected. And India on the startup front is launching 1 unicorn per month, it looks like. Already we are in March and we have 4 unicorns. So maybe we're exceeding our unicorn budget. And India, after China and the US, obviously is the 3rd largest unicorn manufacturing country in the world. So when all of this going on, the finance minister's budget was heralded as one of the most remarkable budgets India has ever seen. And while there are many aspects of it, I'd like to first ask Dr. Anantha Nageswaran and then Mr. Neelkanth Mishra for some general remarks before we get into the 3 pivot points of the budget itself. So Anand, what is it that you would like to bring out as a kind of highlight of this budget in your opinion?
Thank you, Gopal, and thank you, Professor MSK and others for inviting me here. So Gopal, I think usually the Indian budgets are always aggregate documents. They pool all the policy plans of the government, and the budget becomes a document where it announces all of them. So in the past, a lot of times we have been excited by the announcements made in the budget, but politics of the day and other economic compulsions have always left these announcements sometimes unfulfilled. So the reason I was quite pleased with this budget was not because of the announcements it contained as before, the promises on privatization, creating a new development finance institution, or creating a bad bank, and many other such announcements. All those things, in my opinion, are promises. We don't know how they will be executed. But what is gratifying to me was the budget on its own contains the seeds of reviving the capital formation in the country, investment spending, simply because it brought about a certain high level of transparency to the entire public finance numbers of the government of India. And that itself will, over time, remove the risk premium on Indian bonds, bring down the interest rate, because the government for the first time chose to come clean with all the off-budget items, take them on board and start afresh on a cleaner slate. And because of that, temporarily the bond market might have been a bit nervous about the amount of borrowing the government of India is planning, but this transparency to me is the first important redeeming feature of the budget. The second thing is the conservatism. The budget, as you mentioned in your initial remarks, Gopal, only assumed 11% real GDP growth, and also had very realistic estimates for revenue growth in 21-22, and also projected expenditure growth quite reasonably. So in the sense that it under-promised and over-delivered, likely to over-deliver on the budget deficit numbers, and that in turn will surprise the bond market on the positive side. Either two, our strategy has been to over-promise, under-deliver, and engage in accounting, gimmicks to hide the true numbers of the deficit or kick the problem down the road to future budgets. That has been avoided. And I would say these two important contributions by the government, and they don't depend on any other promises being fulfilled. And these two alone have the potential to bring down the cost of capital, the risk premium on government borrowings, and thereby enable the private sector's borrowing cost also to come down. And that is a signal contribution of the budget.
That's wonderful. I think many people have remarked. I think I'd like to share with the students that the transparency of this Indian budget document perhaps is greater than transparency of many corporate balance sheets. Was a comment that I made. I heard often from various people. So Neelkanth, you're a person that all the investors and large institutional investors listen to, hang on to your every word. Sensex went above the number of 50,000, which at one point in time was seen as Maya, that this could never happen. Your thoughts on what you think stand out for you in this budget before we get into the three pillars?
Sure. Thank you, Gopal, for inviting me, and thank you, Dr. Krishnan, for having me here. Privileged to be speaking here. Anantha has covered some of the very important takeaways from the budget. As you know, the budget has two pieces. The first is the budget speech itself, which is very forward-looking. There's a lot of messaging there. There's a lot of promise there. And in many ways shapes the discourse of what's going to happen going forward. And the second is the arithmetic, right? That is the day-to-day budgets of the government. Now, as Anand said, it was the numbers were very transparent. For the students, I think it'll be important to know that the government of India is actually much smaller than most governments that you would study in your school. The total general government expenditure as a percentage of GDP is nearly half that of the Western world. And 90% plus of the central government's expenditure is effectively non-discretionary. So the budget making exercise in general is not very analytically useful, right? So you somehow make do with the numbers, and because there is not much of discretion left to spend anyway. So what was not done in the budget was very important. This was the year where it would have been absolutely fine to take money from the rich and at least drive a political message that we are taking care of the poor. But the government refused to do that, and I think it would have been very natural. There would have been voices in the government to do that, and the government did not do that. In the budget speech itself, there was a very clear turn towards privatization, towards the private sector. This government, particularly the Prime Minister, have been generally talking about him. And in 2013, he said, "My job, I prefer, a much stronger governance with a smaller government." And this time in the budget speech, there was the use of the word privatization. It was anathema. In fact, the minister used to be called the disinvestment minister earlier. When they renamed the department, it was called Department of Investment and Public Assets Management. That itself was a sign there was nothing was going to get sold. But this time, the finance minister used the word privatization. The PM followed that up with a speech in the parliament saying, we need the private sector. We need Indian multinationals. We have not seen a prime minister change the rhetoric of the government so distinctly. And the first sign of that actually had appeared before the budget in mid-November, when the government announced the production-linked incentive schemes. It's the first time in India's history that the government is giving money to companies if they meet a certain production target. This is like Korea and Taiwan of the 80s, 70s and 80s. So I think the messaging in the budget speech, the use of words, the choice of words, the promise it holds. Let's see how they execute on it, right? That the jury's out. And what they did not do in the budget in terms of the arithmetic is all very important.
Fantastic. So I think between the two of you, what we've seen is phenomenal transparency, reducing India risk, not upsetting the rich and the middle class with higher taxes because of COVID to get money back. You've talked about all the important messaging, big messages on privatization, on PLI and so on and so forth. And we'll dig a little bit deeper into that. And maybe we should just start with Neelkanth, with you, just on this issue of privatization. Honestly, most of us who are in the Indian economy are very, very skeptical about this privatization or asset disposal target. We kind of think it's a nice number to keep and then announce that it didn't get done, right? So let's talk about this for a second, Neelkanth. Why do you think, I think they've talked about 1.75 lakh privatization, which is the largest since the 98 budget actually, which I guess in dollars would be like 25 billion as a round number. $25 billion to flow into the coffers by next March. You think that's possible even?
Yes and no, but for the future of the economy, it does not matter, right? So, I mean, when the history of a country is written, 50 years is the least count, right? So, I think many of the big for the achievement of that 1.75 trillion rupees, as we said, $25 billion target, there are two big numbers, right? So BPCL, Bharat Petroleum Disinvestment, that is the privatization. We also have to change that terminology, and the stake in the life insurance corporation. Now, both of these may or may not happen this year, right? So I mean, maybe we'll see us by 6 months or 9 months. I think from a perspective of the government and of the economy, which is growing at 6.5–7% over 30 years, and I think that medium-term growth rates are actually picking up now. I think the signal that the government wants to get away from even PSU banks. PSU banks were in many ways the holy cow, right? That you could not, no government could not touch them, and the government is now saying that I'm going to sell them off. Now, if you see the business at the newspaper headlines of the last 2 days, earlier, in order to make it politically convenient and easily saleable to the public, the government would choose the loss-making PSUs, public sector undertakings. This time, the Niti Aayog, the Planning Commission equivalent, is saying we will start with the profitable PSUs, right? So, and the messaging is that look at what has happened to VSNL. VSNL was this state-owned telecom company, which has now become Tata Communications. And the secretary of that department is now saying, look how many jobs they have created and how you can see Tata Communication advertisements in London and so on and so forth. And there are so many of these erstwhile PSUs which when went into private hands, they've returned so much better. So there are a lot of dead assets. Just one last minute on this. See, I'm currently in Bokaro, right, with my father. He joined out of college and he retired, and this is his house. In taking my morning walks, so this place, it's like a giant wasteland, meaning that there are school buildings which were built for 5,000 students. They're just lying vacant. And I asked my father, why don't we sort of give it to, say, a textile factory? And he said, who's going to do that? And so there is immense wastage of, there is a whole stadium. There's a Mohan Kumar Mangalam Stadium here, which I think can host cricket matches, football matches, but it just lies vacant. So I think there's a lot of assets that the government can get rid of. And I think this is the start of a process. So I wouldn't measure the success of this on whether we meet that 1.75 trillion rupee target. I mean, that, as I said, if they do LIC, they do BPCL, I think they'll meet that.
It's done. Well, that's wonderful. I think that's a very, very wonderful perspective. Thank you for that. I mean, you're basically saying that, very much like the Katha Upanishad, Vajashravas was trying to sell off the cows that didn't milk and others, he was giving it away. And Nachiketa came and pointed out, why don't you sell the good assets first, like your own son, right? So I think there's been a fundamental reading of the Katha Upanishad clearly in the finance ministry from what you're saying. I think that's so well put. And as Modi said, the government has no business to be in the business of business, I think, is one of his statements. So that's wonderful. Anand, just coming back to you, please feel free to add anything to this, but I would also like to take you to this whole issue of infrastructure as we talk about this. And to all my student friends in Michigan, I think, I believe Anirudh might have circulated about 5 or 6 articles about the Indian budget. And I know that you have enough homework at Ross for you to get one more assignment. So that wasn't the idea. It wasn't the idea to punish anybody. But in case any of you flip through it, we want to open this up to a larger question to get 2 eminent economists like Mr. Neelkanth Mishra and Dr. Anantha Nageswaran. I think it's a terrific opportunity. So I'm just going to keep ourselves fairly brief, finish 2 more things, and then come back to you. So give you about 20 minutes. So Anand, I'll just go to the next one on infrastructure. The government has talked about, 34% increase in the entire capex. They've talked about the national infrastructure pipeline. And, I hope I got my numbers right. $1.5 trillion infrastructure pipeline, 111 lakh crores or 111 trillion rupees or whatever is the right number, right? I hope I got my math right here. So, but it's a huge pipeline. Along with it, a dedicated infrastructure institution. And the question, of course, all of us asking, why do you need an infrastructure institution now? And maybe you could answer that too, because all of them seem to have come and gone in the past. So, infrastructure bank. So, your thoughts, Anantha, on the infrastructure? It sounds terrific, but but what benefits will it bring, and what does it take to do this?
Yeah, Gopal, I think you probably might have heard this, but the students may not have. I think it was Joan Robinson who said that for every statement you make about India, the opposite is equally true. So I think we could sort of expand on that and say the government promised so many things on infrastructure, and look at the past such announcements and what the track record is. But I think what the government has done with this announcement of reviving a development finance institution to specifically fund infrastructure is also to learn from some of the past mistakes on who assumes the risk, the upstream and the downstream risk. And it's very clear that the private sector is better capable of handling the risks downstream, whereas the initial risks, which are slightly more difficult, which involve regulatory hurdles, etc., that have to be borne by the government. And I think the new institution, along with this revised thinking on who gets to bear the risk at what stage and who is better equipped to do so, I think that is reflected in some of the announcements, and that is why the government is putting its own money where the mouth is, with 35% increase in the capital expenditure. So in a way, it's a bit like, usually the feeling is that the government crowds out the private sector with its own spending. This is what we learn in textbooks. But here it's the opposite. The government is trying to crowd in the private sector by initially taking the upfront risks, bearing it itself, and creating the platform for the private sector to come in and make the downstream investments. And that is the redeeming feature of the promise on the infrastructure front. And crowding out will not happen if the government is able to surprise the market positively on its fiscal numbers, which is what I had explained earlier. And that would lower the cost of capital as well for the private sector down the road. And I think I would very much agree with Neelkanth that when you write history of nations, it's more like privatization and a different approach to infrastructure, all these like ideas whose time has come. So rather than sort of think about their implementation in the next year or two, it's more about kickstarting something which will definitely, in a 5 to 10 year time frame, would start delivering results. So I think that is how I see the promise of the infrastructure government capex and the announcement of the development finance institution.
Yeah, so I guess, basically this means that the tenor matching between the long-term projects takes place, and also you're saying that the government has understood where can risks be managed best, the fact they're putting their own money. And I think for the students, there is a National Infrastructure Investment Fund, which also the government created a few years ago, which actually creates platforms like a roads platform and a ports platform, along with money from global LPs like ADIA from Abu Dhabi and so on, and Dubai ports, so that they own a series of ports and they also operate the assets. So I think there's a tremendous amount of work going on there in terms of infrastructure. So no, thank you, Anand, and I hope that that statement of what can be said for India, that can be against, will be more for and against if this comes true. It sounds terrific. Neelkanth, you're sitting there in Bokaro. I think when Nehru created the so-called commanding heights of the Indian economy, Bokaro was certainly one of those heights of the Indian economy. And there's been so much of talk on this PLI, or production-linked incentive. I understand that the total money for production-linked incentive over the next few years from the government alone is 2 trillion rupees, which is about $25-30 billion, which would kind of produce nearly $150-200 billion of new manufacturing. It sounds wonderful. It's a kind of, Make in India was always kind of seen more in similar to saying, when will we make in India rather than make in India? So you think the time has come?
Yes, and so this is the first time that the government is putting money behind its intent, and this is India's version of infant industry support, right? So there is and I think India needs to debate this a lot more than it has done in the past, when anything to do with the so-called industrial policy is looked down upon. Whereas if you look back in history, you see that when the UK was an emerging market, when the US was an emerging market in the early 19th century, there was significant infant industry support. As Hajun Chang keeps writing that, you tell your 6 or 7 year old, I have an 8-year-old, you tell him, oh, you take responsibility, you idiot, I'm paying for your school, you earn your own money. is never going to be able to do anything, right? So, this is India's version of infant industry support. There is a risk that it can descend into all the things that people who are against industrial policy can go into. But just because in the past this had descended there doesn't mean we try new things. Unless we try new things, we will never grow. So what the government has done, and so far the signs are very positive, is that they're saying that, look, we will take downstream industry. Let's look at electronics, right? Hardware electronics. India did not have the ecosystem, right? So what comes first? Do you need a supply chain to be set up so that the manufacturing downstream comes in, or do you somehow push downstream assembly of handsets and laptops and tablets to happen in India, and then the upstream comes in? So what the government has done is promising 4 to 6% of revenues if you meet a certain target. I mean, if you don't meet the target, sorry, you don't get any money. 4 to 6% is a lot of money for assemblers, right? It's 70 to 100% of their cost actually. And what that means is that now suddenly India, from producing $30 billion of phones, can potentially have $150 billion of phones. Now, I think it'll be more like 85, 90. The industry is gunning for $150 billion.
Right.
Value addition domestically from about 15%. I think 25% is more practical. The industry is gunning for 35 to 40. These are government targets now. And what we are seeing now is that Indian companies are setting up greenfield sites to do casings for iPhones. We are seeing Taiwanese companies upstream, right? Printed circuit board makers, camera module makers, battery makers, display makers, cell phone display makers. They're all setting up factories. So the supply chain is shifting very aggressively in this. Similar schemes for textiles, similar schemes for automobiles. The details are yet to come out. Similar schemes for biotech. I think the ecosystem development is the objective. I think so far the government has done a fairly smart job of selecting the right products. There are a few I don't agree with, but anyway. But see, you'll miss a few, right? But I think this is a phenomenal support, and you can see the industry responding to this, right? The industry is very excited. You are seeing people come in and invest, and that's what you want. As Anantha was saying, you need to crowd in. So you show the intent. The industry, I mean, these are entrepreneurs. They're not set up a business to earn a salary like me.
Correct. No, I think, and yet unless people like you are paid salaries, then we don't get also the best advice, Neelkanth. So let's make sure we get paid salaries. I think the other thing, I think the students might or might not know that 70% of the APIs, which are the active pharmacy ingredients used to make drugs, are actually imported into India, largely from China, and also some of the key starter ingredients for the APIs are also imported from China. So there's a lot of movement in that place, and Krishna and I come from Chennai, and we're happy to tell you that from China to Chennai is the movement that nearly 25% of all Apple iPhones and iPads in maybe a year or two's time will be made largely in Chennai, a little bit halfway to Bangalore. So I think, Titan is what Mr. Mishra referred to. The Titan watch company has put up a plant to employ nearly 5,000 women, I was told. All women plant to manufacture iPhone precision components. So it's pretty amazing. And I think in case we don't think that what Mr. Mishra said is strong enough, which I think was very powerful, we know that Elon Musk is putting a Tesla battery and a car factory in India. And if that is not evidence, I don't know what is, right? So I think great. I think so. What lovely privatization, manufacturing, infrastructure. And before we go to the students, and I think we're going super early on time, I'd like to turn to both of you. All of these are great ideas. I mean, we're talking about, a trillion here, a trillion there, a trillion here, and a trillion there. All these trillions finally add up, right? And so, just curious. I mean, I'm an investor in companies that lend to small companies, and we are all bought up on stories like, do you know that there is a $380 billion funding gap for MSMEs in India? Do you know that only 16% of MSMEs actually get formal sector funding? And you guys are talking about trillions, and there's inflation, there's fiscal deficits, there's a bad bond market, and on and on and on. So I'd like to turn to you, Ananth, and then to Neelkanth in terms of saying, Where is the money?
No, I think the availability of money comes from both domestic and foreign sources, because the last couple of years we have noticed that the decline in the Indian official national savings rate has been arrested, and it is back above 30% of GDP. What needs to follow is the capital formation. Yes, we could argue that East Asia had 35-40% savings rate, but also that's partly because of financial repression and also lack of investment opportunities. And Indians have far more investment opportunities than East Asian countries had in their comparable stage of development. And therefore, I think India's savings rate of 30-32% is a pretty good starting wicket. And then on top of that, we are going to have extraordinarily accommodative monetary policy and liquidity from the developed world looking for returns. 8 years ago, in 2013, India was considered one of the fragile 5 emerging economies, but now it has been reduced to troublesome trio, and that consists of South Africa, Brazil, and Turkey, and India is not part of that. So in that sense, India provides an opportunity to investors around the world looking for returns on a sustainable basis because of its political stability and its economic policy plan, which is moving in the opposite direction from some of the other emerging economies, which are kind of going back towards nationalism and populism. So I think these two factors put together, the domestic savings rate having reached a floor and beginning to look up in the last couple of years, along with abundant foreign investments looking for return opportunities together, will provide sufficient funds. And naturally, as the corporate sector comes off its bad debt situation, excess leverage, etc., they will also generate internal resources to be able to drive the investment needs forward.
No, fantastic. So I think print more money, borrow more money is clearly one way. Plus foreign money, plus domestic savings. I think that's a fantastic. That's going up to 31%, and hopefully, as you said, capital formation will follow. Neelkanth, your thoughts? I mean, inflation is also probably going to come along with this a little bit. Looking at the fact that I think the U.S. bond rate went north of 2% or something this morning, is what somebody was saying. So, your thoughts on both? Where's the money going to come from, and are there going to be any negative effects of getting this extra money?
So India has always had a problem of risk capital, right? So if your per capita wealth is among the lowest in the world, everyone who wants to save will want to invest in safe investment, right? So I remember my own saving pattern from when I was a student to now. I'm actually trying to put money into venture capital funds. But the point is, at some one point, I would not look beyond fixed deposits. Now, a large part of Indian savings actually go into fixed deposits. So how do you get risk capital? The bigger question to ask is, when other countries were at this stage of development, where did they get their risk capital? The first thing is that the UK grew at 1.5% for 100 years, 150 years, right? We want to grow at 8% for 50 years, but perhaps hopefully more than that. And so the pace at which you need risk capital is far higher than what domestic savings can provide, right? So we can get financial savings, but I don't think we will get risk capital at that pace. To some extent, this is changing. So all the first generation, the Infosys founders have their own venture capital funds now. Many of the first generation startups in some of the companies that I've seen good e-commerce exits, they've also made, and they are big investors in new startups. But at a systemic level, I think the first thing India needs to do is become comfortable with bad loans. Every country which has grown with foreign capital, right? So it was the UK grew with Belgian and Dutch capital. The US grew with UK, French, and Dutch capital. And there were, bad loan cycles every 7-10 years. I'm not encouraging that, but what I'm saying is that this taste for bad debt or loan losses is something that we need to sort of figure out how to solve, right? But at the same time, we have to remember that private equity has provided more risk capital every year in the last decade than primary fundraising in the public markets. So the private equity that is coming in, and I think more and more is coming in, and as they find the opportunities, I personally think that the number of unicorns in India is significantly undercounted. There are fascinating areas where I think there's fascinating growth. So I think private equity will provide that. Your question, I think, would also include debt capital provision, which is how do we, the Indian financial system was geared to give a 1 billion rupee loan, right? 100 crores rupees, so 1 billion rupees. But it was not geared to give, 1,000, 1 million rupee loans, or maybe 10,000, 100,000 rupee loans. Technology is solving that. So as these new fintech companies, build their databases, they've already seeded some of the borrowers. They've given them 20,000 rupee loans. They got their money back. They gave them 50,000, money came back. Maybe at 500,000, they will not give the money back. But algorithmically, they are starting to test out these things. And I think the availability of credit is something that is the biggest opportunity right now for those of the students who are looking for hot startups. I think it's risky, it's challenging, but fascinating. I think that's where the opportunity is. But I think technology is helping solve that. And I'm quite optimistic that the next 10 years will be far better than the last 10 years.
So that's fascinating. So venture capital, private equity, people at liquidity events, like you said, Infosys founders. And as a fund manager, I can tell you several of them invest in my fund also. So I think they are providing great sources of capital, and technology, the way it's changing the whole system. I think it's quite remarkable. I think the way we use our payment systems, and I think the fact that now the country is talking about a national utility, which will allow people to connect all the different banks and NBFCs and credit rating agencies and payment gateways. And I understand, Neelkanth, is it true that the government is actually considering a digital currency in the near future?
So central bank digital currencies are something that every government is going to try out, right? So it is bound to happen. It's inevitable that something like that will be tried out. But to add on to what you were saying, and if the students haven't already heard it, so India's payment infrastructure is actually far superior to that of the developed world. Now, it is
by a mile. I would say by a mile.
By a mile, and we are leapfrogging the cards infrastructure, and the UPI, the payment interface. It's like even earlier. I would pay my newspaper vendor, my milk vendor, my driver, my nanny, kids, not my nanny, but my kids' nanny, through what is called IMPS, right? But IMPS, for those of you who are tech inclined, was like you had to know the IP address and the user ID code of the user. Now UPI is like an email address, so you can send money to anyone you want, and this is growing at 150% a year. And on top of this, because this is also creating data, you are now starting to see lending systems, algorithms starting to get created. It's a fascinating space to be in.
So wonderful. I think therefore the idea, and just to wrap this up as we go into questions, today the announcement is that there's a possibility that Walmart, that was Indian subsidiary Flipkart, will actually get listed through a SPAC, and the home delivery of grocery company Grofers will get listed in a SPAC. And I had calls with two members of the regulator SEBI this morning, two whole-time members, and I told them both, I said, please consider our association submission on the need for SPACs and permanent capital vehicles. And said, no, please send it to us. We're all talking about SPACs. So India is awake to all these new structures and opportunities and doesn't want to be left behind. And on this note of Atmanirbharta, which I think is perhaps the word of the year, definitely in India, I would love to go to the students for questions. And looking at the questions here, let me just start with the last question. And the question I think to both of you is, 97% of Indians don't pay tax, and therefore there is a constant fiscal deficit. And how, in what way does fintech and privatization address this issue, or if not really, how do we address this issue when 97% of the Indians are not even taxpayers? Do you want to take that question?
I can start, and then Neelkanth will definitely have more to say than I do because he looks at these data more constantly. First of all, I'm not 100% sure about the 97% number where it came from, but even taking for granted that the number is right, there is a stock and a flow issue. I mean, you could have a stock of low tax base, but it's equally important, as in the case of the payments data that Neelkanth talked about, the rate at which some of these new technologies are being adopted. Similarly, the recent technological advances have also enabled the Indian tax revenue department to increase the tax base. And given that the indirect tax reform, the goods and services tax, has brought in many people into the tax net. And I remember Neelkanth's own article some 3-4 years ago about how government departments were operating in silos and not sharing information. And now that is being resolved with the direct taxes and the indirect taxes department. There is even probably an organizational restructuring being currently considered. And I think that is going to enable them to share information such that the tax net widens. So it's not as if the government is becoming a usurious tax collector, but it is using the information that is available based on technology and based on some of these new tax reforms to bring in more people into the taxable brackets. So I don't think it is entirely true that 97% of the Indians don't pay tax, because the goods and services tax almost everybody pays, whoever uses any goods and service. So in that sense, even if the low tax base is a fact by and large, whether it is 97% or some other percentage, the flow is that the tax base is increasing quite rapidly, and therefore financing these things is not going to be only on account of privatization, but the government will have ample revenue growth with the growing economy to fund its own development expenditure.
Neelkanth, let me take another question to you. I think somebody, Ravi, one of the real stalwarts of India at Michigan, Ravi Pense, asked this question, saying that, listen, we know it's really nice to hear about PLI and the China to Chennai movements and so forth, but are we still over-dependent on China strategically? And is there something more that we need to do to reduce those dependencies from an economic, financial security perspective?
Look, this, see, China is an economy which is 5 times the size of India, right? In many areas, they have developed technology, they have developed ecosystems which are far superior to what we have right now. It is not something that is going to get corrected in 1 year or 2 years, right? And as Gopal was saying, that if it is a penicillin, now there are only, I think, 4 companies in the whole world. 3 are Chinese, 1 is German, where the penicillin API, 7-ACA, and I think 6-APA as well for some ciprofloxacin or something. So that's what the only 4 companies in the world provide that, and we were importing everything on that. So if you get into a conflict situation and you can get arm twisted, I think there is something that you need to do, and I think some of the PLI schemes try to address that issue. But if it comes to areas where your dependency for that category is not high enough, I do not think that we need to and we should really try to make things more expensive, because finally, we should not forget that open trade, free trade has its merits. So we have to prudently choose where we need to intervene and where we don't need to. The dependency on China is, to many extent, will actually start falling now, because already in things like, say, toys, right? So the Morbi belt, which was very famous for the tiles work, etc., is already. I mean, when I buy toys now, and they were gifting for my own kids, there's so many of the made in India toys on apparel, because see, China in the next 10 years is going to lose 50 million more workers. So anything which is labor intensive is going to move out of China. China would want that to happen, because as their per capita income grows, I mean, there's only so many things that you can automate. So I don't think we need to be paranoid about over dependency on China, but at least, I mean, so wherever it is critical, you can get arm twisted if you get into the next conflict. Perhaps it makes sense to start focusing on self-sufficiency. If you try to overdo it, you'll make the economy inefficient. On the income tax side, I must add to what Anant was saying. See, don't take 1.3 billion people as taxpayers, right? My kids are not going to pay tax. So there are 500 million, 550 million workers. I mean, we don't know how many, but broadly that many. And about 250, let's say 220 to 30 are farmers. And most of them are marginal farmers. It's only about 10, 15 million who actually have surplus produce in a reasonable size. So a large number of people are not in a position to pay tax. I mean, it's a very poor country. The problem has been that the rich don't pay tax. And to catch that, as Anant was saying, so the expansion of the tax base is get more people to pay tax. More, that is the rich to pay more tax, not more people to pay tax. And I think the use of technology is going to help making things completely transparent, because see, the problem for the center was the state at the center, if you think about anthropology and all that, is that it does want to have more power. I mean, the people at the center will want that power, but if it is a manual system, that power is usurped by the arm, which is interacting with the taxpayer. So if your tax liability is 20 million rupees, you pay 1 million, the taxpayer who comes, you give him another million, and you're sorted, right? Now, how does the center solve this problem? It is technology. So now they are doing faceless assessments. Suddenly, getting a posting in Mumbai is no longer a hot job, right? You don't pay a bribe to get a posting in Mumbai to a tax inspector. So some of these problems, I think, will get a few years to get resolved, but I think we are going to see some progress. If you are modeling the tax to GDP, don't build in a 2% increase next year, right? It will be 20, 30 basis points.
And India is what, Neelkanth, around 17, 18% tax to GDP totally?
Correct.
Somewhere in that area. And America would be the 20s, right? Or
oh no, the developed world is all 30 plus. The
30
Europeans
plus, so huge gaps still.
40 plus, yeah.
Fabulous. And I think a couple of other questions, and I'd love to hear also a question from Professor Krishnan if he has any. Anant, you talked about more governance, less government, right? But one of the audience wants to know, are we underfunding government as well? Maybe we have a lot of legacy expenditures like pensions and current staff, but what about health workers? What about security? Do we need more workers? I mean, somebody was pointing out that in the New York City has more city workers per capita than Delhi or Chennai or Mumbai. Your thoughts, Anant? More government is also needed, not just more governance?
No, I think the question is spot on. I would say one of the important things that has held back India in terms of realizing its potential is what we call the lack of state capacity, especially both at the top union government level and the local government level, the required capacity, either in terms of the numbers of people. I mean, whether it is the food and sanitation department inspectors, or as you mentioned, security or healthcare workers, etc. So clearly, there is plenty of room for government to augment its capacity in specific areas, and that definitely will have to happen. And my expectation is that even the government gets out of areas where it doesn't have to be in terms of running businesses. And I mean, I think Neelkanth mentioned about various idle assets that could be monetized. Then it would provide government with the wherewithal to augment its capacity in areas where it needs to be. So I think that is where the direction that is going to happen. So first thing is to sort of get out of where you don't have to be and realize some potential and realize some funding capacity to be able to increase your strength in areas where you need to.
Understood. And I mean, and maybe I think a couple of questions on. I think in interest of time, we have only 3 minutes left, so I'll just go to Professor Krishnan. I'm just curious, Krishnan, what do you think CK would ask if he was here?
Well, that's a difficult question to guess, CK. But I was just, first of all, thank you very much to all three of you for fascinating discussion. I was just wondering, I mean, it's great to hear this optimism about the budget, whether it is upfront investment or privatization for the government. I was wondering, traditionally, while when you talk about manufacturing, the growth in that sector in India, we always, talked about these availability of skills and labor and talent, right? to meet the demands of that is there. And so certainly from an education institution side, I was thinking that how's that being tackled now? And of course, in addition to that is the labor loss has been an issue for quite some time. So now that we have this investment upfront and then, to kind of push this wheel, how are we tackling that? I mean, in terms of capability of talent and skills, and of course the labor loss around it.
Anant,
Okay,
Neelkanth.
take that. Yeah.
I would
So
let Neelkanth go first, yeah.
I think. Sorry, go ahead.
Neelkanth.
Okay. So there is. So I think it's a great question. Even for the tech supply chain, when I asked one of the large handset companies, are you facing a handset assembly? Are you facing a talent shortage, skilled worker shortage? And he asked me with a blank face, what talent, what skill? So for assembly related work, you don't really need any skill, right? So you can hire someone who's reasonably literate, and in 6 months, 3 months, you can train them. I worked in Infosys where when we went out to hire, and this is 2001-2, right? And I came back and complained to my boss that these HR guys are just hiring any junk. And my boss laughed at me and said, look, we said the same in 93. And then Chris explained to us that, look, we need to grow. This is the heads and hands business. And it is our job to make them trained and work. So Infosys would get those sort of unpolished gems, and we had brilliant people, right? So with that training, 6 months, 9 months, see, genetically, we are 99.98% the same, right? So with the right training, I think things can work. It is going to be a challenge, but just like you saw for IT, right? So we went from producing no engineers to producing, hundreds of thousands of engineers, I think a few million maybe. And then suddenly that automatic market correction happened, right? Because those guys don't get jobs, so those colleges shut down. And I wouldn't be surprised if, say, a technician's job for producing printed circuit boards suddenly becomes hot. There will be training systems which will start emerging. I mean, you have to get the business. See, it's as they say, you open a shop and you get the customer in, you'll sell something. And I think once the customer is in, the problem gets solved. I mean, plumbers in Mumbai societies, there's a whole mafia of a couple of villages in Odisha, which actually, I mean, mafia is a crude word. I mean, a group of people who all come and they are self-trained. So I think it's a problem. It needs to be addressed upfront. Our R&D skills, our training of, we have too many engineers, but too few technicians. And I think like Manish Sarwar has written brilliant tomes on this. And I think we need to solve some of those problems, but where we are, I don't see that as a problem. I mean, there are so many unemployed engineers who are working in call centers. I think, and they may not be very good, but if you just do the pyramid, and on average, Indians are not, much or less smart than others. There will be 5-10% of the people who I think be able to job. Right now, it's not a problem. 5 years later, it could.
Gopal, with your permission, I would like to address the second aspect of MSK's question on the labor reforms, and I would broaden it to the overall set of legal and compliance. In fact, earlier in the conversation, Neelkanth mentioned about privatizing or divesting from LIC and the BPCL. I would actually second that and say Government of India or Indian governments in general need to divest from LIC. And I mean legal inspection and compliance, Raj. That is my LIC. That's the LIC that India needs to get rid of, and it is still pervasive. And I think one of the reasons why India doesn't have a Mittelstand as other developed countries have today is partly because this LIC, Raj, is still very much intact, and that needs to be dismantled if we have to talk about going from the current optimistic trends we are witnessing in some of the sectors at the top corporate level. If it has to percolate down to the bottom rungs of the economy, that is a task that still remains largely unfinished. And that needs to be attempted if we are to sort of make the transition from 2 trillion to a 5 trillion, or from a developing country to a middle income country. That has to be confronted and addressed.
And all the folks on this show, I think that we love those phrases, right? We had LPG before, liberalization, privatization, globalization, and now you have LIC for the license inspection and so on and so forth, and corruption and so forth. So, it's been really wonderful. I think having both of you here. Thank you so much, Neelkanth, to join us from Bokaro, and Dr. Nageswaran for joining us from Singapore. I think, as I said, I think given that this is on the banner of Michigan and CK, I think CK would be really happy, because I remember after he wrote his paper on India at 75, when he wrote his final follow-on document just before he passed away, he always spoke about the need to go from independence or swatantrata, which is sort of is defined by somebody else, so independent from somebody, to azadi, which is freedom, which is atmanirbharta. And so I think in some sense we're all on the same track, and it's wonderful to have both of you. Thank you very much for joining us. And I think I hope the students found this as an interesting show. I think please do look at those articles that came, that might add more color and texture to what you saw. And as a parting note, today India delivered 1.5 million vaccines today. The US delivered 2 million vaccines. So we're catching up there too. We have about nearly 20 million people vaccinated in India. Long way to go. And I'm sure we'll get there. So everybody stay safe and get vaccinated as soon as you can. Thank you so much, Christian. Thank you, Ani, and thank you to the entire Michigan team. Thank you, Neelkanth. Thank you, Anantha.
Thanks for the opportunity.
Thanks, everyone.
Thanks. Bye.